when you buy a car that's just a little too expensive, but it's really nice, so you do it anyway. Well, to do it, you have to get a loan from the bank. You tell them they can have the title to the car until you pay off that loan. That way, if you don't pay the loan, they can come and take your car. Or, what about if you're getting ready to buy your first house? Well, for most people, you definitely need a mortgage. You put up a down payment of 20%, so that way you can borrow the other 80% and then make payments on it. Well, the money for the car and the money for that house come from a bank. They lend money knowing that you will pay high interest on it, and they give that interest to their lenders. Well, of course the bank takes their cut. Well, AAVE is the cryptocurrency version of that bank. Welcome to Crypto Codebreaker, your gateway to unraveling the mysteries of cryptocurrency. Don't forget to show your support by liking the video and hitting that subscribe button. Here, we explain topics of the cryptocurrency world using analogies, stories, and examples so that you can easily understand them. Now, what does AAVE stand for? People can give and borrow cryptocurrencies through AAVE, a decentralized financial app, in exchange for getting and paying fees. AAVE is a form of peer-to-peer loan that uses cryptocurrencies as the currency. AAVE, on the other hand, uses an algorithm to figure out interest rates and connect lenders with users. Another thing that goes with AAVE is an Ethereum-based token called AAVE. This token powers the governance on their website. The main idea behind this coin is that people who own it can vote on changes to the app over time. In 2017, a group of hackers worked on making something called Ethlend. They basically made an MVP platform that matched lenders with different borrowers, but it wasn't done automatically. The people who needed loans had to wait for an investor to show up. Liquidity, the amount of money in the system, and matching borrowers to loans were two big problems they had to deal with. So, they changed Ethlend at the beginning of 2020s, making AAVE. The founder of the company said that the recent drop in the value of cryptocurrencies was the best time to change their product. AAVE utilizes smart contracts, which are just pieces of code that get run automatically based on certain conditions to run the platform. Now, if you're new to smart contracts, you should definitely go watch our video on it, where we break it down really simply using stories and analogies. Back to AAVE, this time, instead of using peer-to-peer lending where a borrower had to match with a lender, AAVE used a peer-to-a-smart contract method so lenders could deposit money into a smart contract and earn interest, and also borrowers could deposit their collateral into another smart contract and borrow from any smart contract they wanted to borrow from. They used new algorithms in the smart contracts to determine the loan rates based on how much liquidity was in each smart contract. That was really confusing, but by the way, AAVE is a Finnish word that means ghost. They stuck with this for the branding because when you lend your money or borrow your money, it's all anonymous. No banks regulate it, nobody else can see what you're doing, and specifically, you don't know who is on the other side of that smart contract. Now that you know how AAVE came to be, let's talk about what they do. On AAVE markets, you can see what the rates are for borrowing and giving money right now. Take a look at this page to see an example of USDT, or Tether, giving a pretty good deal. Besides that, you can see that Ethereum has a pretty low rate. This is because Tether is a safe coin, meaning its value won't change much. On the other hand, Ethereum's value is changing all the time right now. When you give, you have to borrow. You lend your cryptocurrency to AAVE and they pay you interest on it. But we're not going to get into the specifics of how that works. One thing that comes with giving is borrowing. After putting some of your crypto into AAVE to make interest, you can use it to borrow money. Let's move on to over-collateralized loans. Whenever you borrowed 80% of your house to make payments on it, the house was collateral. This means if you couldn't pay the loan back, the bank would just kick you out and take your house. In short, you gave them collateral that they can take if you don't pay. Well, crypto loans don't necessarily work like this. If you want to borrow crypto, you have to be over-collateralized. This means if you want to borrow $100, you must give the bank $120. For most people, you might think this is crazy. Why in the world would you give someone more money than you want to borrow, especially if you already have that money? Just think about this. It's possible that you borrowed $80 worth of Tether, which is a safe coin tied to the US dollar. You could use that $80 for a few months and then decide to pay it back and get your Ethereum. The price of Ethereum has since doubled, so when you cash out your 100 Ethereum, you get $200 worth of value because the price of Ethereum went up. But this is also a bad thing, because AAVE has something called a liquidation threshold above which they will sell your collateral to pay back the loan you made. Investors will never lose money this way. Let me give you an example. If you put up $100 worth of Ethereum, you can take up to 80% of that amount. This is known as the maximum loan to value of Ethereum. You choose to borrow $80 from Tether. Yes, AAVE will take your Ethereum and pay back the loan if the price drops to more than 82.5% of its value, which is the liquidation percentage. But you can keep the $80 you borrowed. Speaking of loans, we were actually wondering if you wouldn't mind giving us a loan of one like. You can have it back later, but right now, we really need likes so that we can grow this channel and that our hard work is rewarded. Sounds good? Let's move on to the next topic. Using AAVE, you can create a very leveraged position, which is essentially borrowing on steroids. And to understand this, we're going to go over an example really quick. So let's say you have $100 of Ethereum. You deposit your Ethereum to AAVE and withdraw $80 worth of USDC, which is an Ethereum stable token. You take that $80 worth of USDC, go over to Uniswap, and then trade it out for more Ethereum, which you then go back to AAVE and deposit. You've now put 180 Ethereum into the account. Even so, you can still get 80% of the $80 you put in, which is 64 USDC. Now you trade that $64 in USDC for more ETH and add the money back to your AAVE account. And now you have $244 in Ethereum that you borrowed, even though you only had $100 to begin with. This means that if the price of ETH goes up by 10%, you will win $24.40. You would only have made $10 more if you hadn't taken that risky stance. But I'm sorry, but if the price of Ethereum goes down, you're in big trouble. If you earn enough to be liquidated. Next up, let's talk about paying those loans back, because you might be wondering how you pay back those loans that you borrowed. Well, since you technically put up more than 100% for the loan, you just have to log into AAVE and repay the loan every now and then, just a little bit. AAVE loans aren't like traditional loans where you have to pay it all back by a certain date. Here's what the official AAVE website says. Now the question is, when do I need to pay back the loan? AAVE says, there is no fixed time period to pay back the loan. As long as your position is safe, you can borrow for an undefined period. However, they say as time passes, the accrued interest will grow, making your health factor decrease, which might result in your deposited assets becoming more likely to be liquidated. And finally, I want to talk about something that AAVE does called flash loans. This is a new service that they offer that is one of the main reasons people choose them. We have been making a whole movie about flash loans, so if you've watched this far, you might want to consider subscribing. A flash loan is a type of Bitcoin loan that lets you borrow up to $1 million without having to put up any collateral. But there's a catch. When you pay back a flash loan, you have to do it in the same coin block itself. Well, you might be wondering, why would you need a loan that you have to pay back almost immediately? Let's say, for instance, you could buy Ethereum at Binance for $1 and sell it to Coinbase for $1 and a penny. Each time you did that, you would make a penny. It would be crazy to spend millions of dollars on that over and over again. Here's one reason why you might want to get a flash loan, even though the Ethereum network would make you pay it back in 13 seconds. There's more to flash loans than just AAVE in this video, but we've pretty much covered everything there is to know about it so far. We'd like to thank you for watching our movies and supporting our channel. We hope that you learned something most of all. Thank you guys so much for watching, and we hope to see you in the next video.